I dance, make it hurt.
What's up, Relentless Traders? It's your host, Surreal.
Forgot his name. And Juan. And
I
Juan.
wasn't. I was looking at the notes. My bad.
You're good. Don't worry. As you guys can tell, we're using camera, some video this time. I just wanted to switch it up a little bit here. But kind of going into straight into our topics. The volatility continues in the market. Obviously, I mean, yesterday we had a absolutely wild day. I think the indexes were gapping down 2 or 3%, and then they ended up on the day 2 or 3%.
Yeah.
So that
Um.
was some insanity. Definitely the first time I've ever seen that.
Pretty much, what our topic's going to be is headline risk. So, as I'm sure everybody knows about the crazy news that's come out over the weekend or this week, the beginning of this week, when they actually began invading. Um, we knew the market was correcting beforehand back in November. Me and Juan were looking at market breadth and talking about cycles and stuff like that. And if you go back and listen to previous episodes, when we were in that previous rally in November, we were thinking there was going to be a major correction. And then, we started topping through December and getting that widening volatility and chopping in the indexes. And we had the big we had the big down move in mid-January too, and then we kind of rallied back up to the moving averages. And so the market's just been really vulnerable to headlines, as we can see. And we spoke about it too. One, like I think this week and last week, we said we were thinking that the market just looked like it was on the ledge, just waiting for something to push it over.
Yeah.
And it's funny how that one of the topics too within the headline risk is the price action preceding headlines and stuff like that. And so it's giving those context clues, and you can kind of see things, with the unfortunate um,
Invasion.
invasion of
Yeah.
of Ukraine. It's very unfortunate, and it's terrible the things we're seeing. But it was kind of clear to see that freight train coming down the tracks, and you're looking at the market, and it looks very vulnerable. And you're like, man, one thing could send this over. And I can't remember what day it was. It was a day or two ago when they actually started invading that night. I pulled up futures, and I was like, oh, there it is. They started just kind of dropping, and that was when we had the big gap down. So yeah, it's definitely the headline risk with the volatility is just it's crazy down here. You got to be nimble, you got to be quick, you got to get your profits because within one intraday range, you're doing up, down, consolidating back up, and then flushing before the close. There's so much volatility and variation.
Yeah, it's been really tough. And I know we'll go over this too when we go over the topic of the week, but being prepared every day, knowing
Mm,
exactly what you're looking at with stocks, having, preparations set in stone, is extremely important because if you just go in without a plan and you just want to trade anything that's moving, I think, I don't want to say 9 times out of 10, but definitely over 50% of the time, I think you're going to get stopped out or you're just going to take unnecessary losses. So
for sure.
I think, do you want to start going into our each our end of the week reviews?
Yeah, yeah. Let's do it. You can go ahead and start us off, right? You had some
Yeah, let me
pretty
switch
good
over
trades
here.
this week.
I had definitely a lot of trades. I felt extremely, I felt extremely good.
Mm,
Um, just overall this week, I felt like I was executing
yeah.
properly. I know, we've spoken a lot about these very tight risk entries. If it goes against
Mm,
you, you can almost immediately stop out because you're almost kind of teetering on that edge. I know we
yeah.
spoke about it yesterday, and there's a potential for us to have more wash trades there because if it goes immediately against me, I will stop out. I'm not afraid to stop out. Um, but you have the opportunity to for those momentum gainers to really pick up. And I took advantage of some of those moves this week. Again, I
Yeah.
come in, to every day prepared. I know where my supply and demand zones are, and I know exactly what it is I'm looking for.
Mhm.
And so, there's no for me, there's no real, like it's not a guess it's not a guesswork for me. I go in, I have charts pulled up, I have contracts pulled up, I know exactly what I'm looking for, what I'm looking at. And so I kind of wanted to go over, kind of touch up on that topic with the headline risk. I was in a Tesla trade yesterday. And I traded Tesla both ways. I mean, if anybody just focuses on, I know a lot of people just focus on Tesla. If anybody just focuses on Tesla, this is a big mover and can get you, really good gains both ways if you know how to read price action properly. If you have plans set in place, if you know your supports, resistances, trend lines, if you depending on whatever it is you trade. Um, and I was in Tesla, I believe, long right off of this level right here. It held its intraday lows. It was wedging right after I had a huge, it had a huge intraday pop from that gap down. Started wedging, started, flagging out. If that's that's what you call it. I, held its lows, held its lows, held its lows. On this time here, as it started trending up, I went long on it. I obviously got my pop. I got a pretty good trade out of it. I, got it for like 25% here, and I got out of it. And then, it started picking up some volatility, rejecting its highs. And then here, I mean, you and I both saw this in real time. It just flushed. Market bailed it out for sure, because the market kept rallying and it was a huge liquidity grab. Anybody who picked it up right there at the bottom. But I believe, news came out for Tesla, something about an SEC probe. And it just picked that, this would have instantly taken me out had I kept holding this. I mean, there is, the way the headlines are, the way these stocks are reacting to headlines is absolutely nutty, and that's why you have to be super protective of any type of gains that you really get in the market.
Yeah.
And then, I mean, I think it was like I think it was like 3 trades Monday. I took 2 yesterday. I took another 3 today. I am up
Mhm.
on the week slightly. Um, you know, I'm just stacking the small winners. I have a small account. This is something I keep, pushing over and over again. I'm not here to, make $150 a play on a $1,200 account, $1,300 account. I'm just consistently, following my plan and stacking my 20, 30, 40% winners, and really,
Mhm.
really trying to narrow down my entries. I'm still a new trader. I'm still learning what it is that, I'm comfortable with. And, this week, I feel like to myself, I really proved that I'm building up that comfort level in my execution. Because a lot of these plays, there was just there was no, there was no, for lack of a better word, lag in my reaction. I instantly
Hesitation.
Yeah, there was no hesitation. I instantly, would enter and exit contracts.
Yeah.
And just following my plan. And when I entered, I knew where my stop loss was. I knew what amount it was. I was comfortable risking that amount. And at the end of the week, I'm green, and I came out green. Not, there's not a whole lot for all the plays I did, but that's fine. I'm working on my execution. I'm slowly building up
Mhm.
that part of my trading skills as well.
Yeah.
So definitely too many trades to go over. 3 today. Uh, traded Apple this morning.
Mhm.
Traded Apple this morning puts. Right off of VWAP, came down a little bit. I could have traded calls, but there was no plan for the calls there. I did have the plan for the puts. There was a supply zone right here, had rejected right off the open. I traded AMD. Key level in a supply zone, just as it was wedging upwards as the market was making lower lows, lower highs, and as soon as the market started turning up, this started turning up to the key level, so I took it here for a win, and then I had an Nvidia, uh, a small loser there, also anticipating a supply key level break there.
Yeah.
Um, but just overall, I'm green. I'm super pumped. I'm hyped, and I'm gonna continue pushing forward.
Nice. That's good, man. Yeah, I mean, this market really caters to you too because you're getting range, but you have to be nimble, which you're very nimble. You're scalping most of the time, but like exposing yourself to the bigger moves. So I think I think it's a good thing to be nimble because the way you're trading is very consistent, and what you're risking, to where you're taking your profits is really good. You're getting your multiples
Yeah.
of your risk. And so when the market does, improve and things like that, and we get these longer trending days, you're really gonna be able to press the gas, and it's gonna be hopefully a little bit less stressful. I hope for us in terms of like the uncertainty, because you get a move in your direction, and like you can't, you know, if it's a trending day, that's great, but you never know if it's going to be a trending day. You never know if you're going to catch the fade, off the open, where it rips. We're in a bear market right now. So if the open rips a little bit and you're looking to fade that, you don't know if it's going to fade for the rest of the day or if it's just going to go, straight down for the next couple hours. So I think you being really nimble, it's showing that your strategy, what you were doing even before we kind of were entering the correction, is really shining right now because you're consistently stacking,
Yeah.
with no stress. You said yourself you executed really well this week. So,
Yeah, I was definitely very proud of myself. I definitely, as I've spoken about before, especially here on the podcast too, is I suffer from execution anxiety, and it's not a matter of
mhm,
me being, too big of a position size, or
mhm,
me not knowing or not having a plan set in place. I have plans set in place. I have,
mhm,
I know my position sizing. It's typically small. I'm risking very small. I have set stop losses. But for me, it's a matter of, I'm a newer trader, and I'm a little iffy on the being wrong aspect still of the market, and I think that really affected me, especially when I first started trading
yeah,
on that execution. And I've been working on that slowly, I think to me this week really showed me that really showed me a positive there for sure.
mhm, totally, yeah. And you're building that confidence. I mean, you're seeing your account go up, and that's what it's about. About being consistent and seeing that growth, and then compounding just takes over from there. Until you run into issues of a drawdown. So you're doing
Yep,
great.
for sure.
Really proud of you, man.
Appreciate it.
Keep it
Appreciate it.
up. I got to catch back up from my crappy trade. I'm sharing my screen. I don't know if you switched over yet or
I
not.
did, yes.
Awesome. Yeah. So same with me. I'm still under PDT rule because I'm using margin account. So I have my three shots. I think from last week or whenever the week before that when I took that big loss, my account got flagged, but I got a reset. Um, So it is what it is. I'm working with what I have every week, and that's only 3 day trades. Unfortunately, I could switch to a cash account, but I just like the leverage of margin. I like being able to take a large position because I'm trading these large caps recently, and so I'm like, my account's only at 7,000 right now, but I'm using the full like I'm going in with full margin. I'm taking $15,000 position when I go in.
Yeah.
I'm doing that though, for those who are not really familiar with it, like I'm using very tight stops. So, it may cost me $15,000 to day trade Nvidia or Tesla, but when I'm using a 50-cent stop, a $1 stop, and I'm like, I have 15 shares, I'm risking $15 at that $1 stop. But
Yep.
these large caps provide so much range that the risk to reward is there. It's worth putting in a 50-cent $1 stop when you can capture 20, 30, $50,
Yep.
on these
Uh-huh.
stock. Like it's crazy risk to reward. So
Yeah.
Monday I was a little overzealous because I wanted to kind of get back after my break. I kind of was eyeing stocks to look to fade off the open. And so on Tuesday, actually Tuesday, I did just that. I was looking for weakness off the open because they had rallied so much and we're in a weak market, and that's kind of been the I guess the theme is when these kind of rip off the open, it's either mostly short covering and stuff like that, or longs chasing, thinking we finally found a bottom in the market. And so I'm just looking for tight entry at a resistance or a high where I can get a pattern and get a really tight risk to reward and take a shot at it and just see. Like I don't know if I'm going to be right or not, but that's been the theme, so I'm going to stick with the theme, and that's what I kind of did here. I was a little early on the Nvidia trade. Um, I took this one off the 5 minute. Usually I like executing off the 15, trying to write it off the 15, but I will execute off the 5. I wasn't really paying attention to this level up in here, this previous high, which I should have kind of been eyeing up in this area, this 240 level, and it would have made sense. I got a little overzealous by shorting a little early. I kind of waited for this doji candle. I saw this big extension on the 5. The smaller extension still closed at the high, and then we started getting some range here in this candle. So I was like, okay. If it's going to fail, it's probably going to put in here after this big long extension, kind of far away from the EMAs. And then I actually, this candle opened, kind of pushed up a little bit. And then as soon as I saw it start to reverse, I kind of uh, shorted right into that weakness as soon as it started showing weakness, and it reversed from there. Usually I like to take the entry below the body of the range candle. So as it's coming through the lower part of this body, I kind of like to enter that way because I can kind of see the candle start moving a little faster. That's kind of how I like to see it. I like to see it move with force, and then I like to see the tape pick up in the color of the direction I'm taking the trade. So if it's long, I really want to see the tape start to go green. Um, with institutional orders, I kind of have it filtered to bigger blocks, especially in this market environment. I don't, you can have the tape filtered to 200, and you see these orders start to print, but you'll see price action moving. But if it's filtered to 200, this tape won't be moving at all. You'll have a couple here, a couple orders here, and price will still be trading, but the tape's not moving on block orders over 200. So that tells me it's like, there's no real oomph behind that. So if I'm trying to take a short, I want to be on the side if the institutions are unloading on people. I want to see this tape flying red, especially as I see a candle start to move in the direction I'm looking off of a tight area. That's key for me. Um, so I kind of was seeing it a little bit. The tape was picking up, moved down lower. I was anticipating, I was looking for some strength to come in since it was the first high. I was looking for maybe a lower high and some reversal. But as soon as I saw this candle try to push with some force and then they bought it back up, as soon as I saw that wick, I was like, man, this just could be a pullback and I might be a little early to the short. So I kind of covered into this wick. It actually came up to here and I covered a little bit before the candle closed. And then it came down a little bit more. So as we can see, it pushed up through the high. So it's just another example of like you have to be quick. You can make money in this market if you have the right time frame, and you're entering properly.
Yep.
So the real short was off that 240 area. If you wanted
A
a
trending
duration.
day. Yeah.
Yeah, I mean, not even a trending day,
Uh,
but like the trending
yeah.
day was the next day. We all know,
Oh,
but
jeez. Yeah.
that's what I was talking about is looking for that key level of area to kind of do business like you do with your supply and demand zones. Same thing in key levels, same exact thing. We're all looking at the same stuff. It's common sense. Like, hey, I should have probably waited for the 240, and then, I mean, that's what I'm talking about. Look at that fierce. As soon as that candle opened, just straight down, and that's what you want to see off of a key level or a pattern. So, it was a little early, and then I was kind of watching Tesla the same day too. So it was a good trade. I made money. Multiple of my risk. That's all I can ask for. Tesla, I took two trades. I'll be quick here because I know we're trying to hit our timestamps. We want to talk about our topic. Tesla, same thing. We keep seeing this like where they pop open. Typical bear market. They open up and they rally a little bit. They rally a little bit, and then you just look for that weakness to start to come in. And it did the same thing. A lot of people try and get short off the first high, but if you really wait to see if it can make a lower high, like if this didn't push up above here, that's kind of what a lot of people are looking for to short. Because as soon as that lower high's in, if you get a tight candle there, like that's an area where I can manage risk from, and I'm
Yeah.
gonna go in, and that's what I'm talking about. I mean, look at this move. After that high came through and just, I mean, it flushed straight down.
Yep.
I did try. I missed this short. I missed this short here. This was the same day, Tuesday. So I was actually, shorting Nvidia on this portion of Tesla, like while this was printing. So I actually flipped back over, and I was kind of watching Tesla as the day went on because I didn't know if I want to take a trade. So I missed, this big portion of the move. I tried to catch the knife here on Tesla. I kept a tight stop here because I kind of was like, this should be. I was looking for like sort of a mean reversion intraday play where it was going to rip back up a little harder and bounce because this was pretty extended on the 15.
Yeah.
And so that was the idea with that trade. And on the 15, you can really see how extended we got here. I mean, 1, 2, 3, 4, 5, 6, 7 red candles in a row, and then I see this green start to go green, and I'm like, okay, maybe I can get a fierce bounce here. And so kind of got stopped out in there. Small loss, no big deal. Wash trade. And then I kind of missed it. I was watching it range out on the 5 and the 15 there, and I missed it because I was like, man, this thing's hard to borrow. How many people have been shorting down here? Thinking we're gonna gap down tomorrow and go even lower and da 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 on Tuesday. And so I kind of saw it start to form this range here and kind of get tight, especially on the 15. I just missed it. I was looking away. Uh, and I didn't have an alert set, so I kind of caught it, but it was squeezing them hard, and that was my thought was the end of the day that they were gonna probably short squeeze into close because we had such a big down day. So the breakout entry would have been right through, right through this range area. As soon as this candle started to move, that would have been the entry right there. Keep a 50 cent, $1 stop, and just, I mean, it exploded. I caught it a little late, but like I said, it was moving so fast. Um, I was okay with jumping in there with a tight stop. Uh,
Until the
and
volume definitely picked up there for sure.
yeah, and got a great move out of it. I knew it was like, I'm not gonna. You can't play for duration moves in this market, because like it's like they're short squeezing, but like this isn't longs buying into close. We're still in a bear market. That's situational awareness. Even though we did kind of gap up a little bit, but that's what you got to be thinking in real time and intraday. So I faded that strength. This candle was a big green candle, and I probably sold it as it was starting, as the 15 started to come back in, and I was like, yep, there it is. Going to go ahead and fade it, take my profit, call it good. That was that was an $11 win on on a large cap. Again, took it with 15 shares, risking 15 bucks, made like 155. That's great risk to reward. You know what I mean?
Yeah.
So really happy with that, but blew all of my day trades, and then I was really bearish on Tesla, and of course the flush came the next day. And these ranges on these caps, these large caps are just, especially Tesla, is just amazing. 830 opened, flush to 760 all in one day. So tons of potential, man. Tons of potential if you're in the right area and
A
you're quick and
lot.
nimble.
Yeah, I mean it's 6. I mean, definitely the next day Tesla opened up right until supply level I had and it just flushed. I mean,
Yeah,
I tried to get filled on it and every time I tried to get filled out it was like, you know,
yeah, with your contracts.
yeah, every time I try to get filled it was just another extension candle down. I'm like, "Oh, I'm just chasing at this point. I'm going to let it go." And
Yeah.
I could have chased it and it still worked out, but in this like you said in this market you never know. I mean, everything's
Yeah.
reversing super quick. Um But I think we can go to our topic for the week. I think we covered just a little bit of what we were talking about, the headline risk
Mhm.
that comes with trading this market. We've seen a lot of headlines go through the past, especially the past week, with the unfortunate, invasion happening. The market is reacting to all of them pretty much.
Yeah.
And uh, I think it's super important, like you said, to be nimble. To have plans prepared in place, and just before you enter a trade, period, and because you're
Mhm.
exposing yourself to that potential, um, to the market either rallying on good news or dropping heavily on bad news.
Mhm.
Um, I think that's my my quick 2 cents on that. Price action, huge. For me, I know we talk about that price. A lot of times we talk about price action precedes the move.
Mhm.
And it's kind of like what we spoke about at the beginning of the episode, where we were like, the market looks really weak here. It looks like at any
Mhm.
point it could roll over. And then what
Mhm.
happens on that day where it looked like it could roll over? A headline comes out. Like I said, the unfortunate, Ukraine
Mhm.
news, and then what does it do? It gaps down overnight.
Yeah.
Um,
And then, oh, that is, yes, that is a perfect example. And I don't. Can I share my screen real
yeah,
quick one more
yeah,
time? I forgot that before when we went over our notes. I wanted to bring that exact example up. That's a perfect example of headline risk and how what you think is going to happen, what you expect in your plans, or like when we were talking about with a bias and stuff like that, like
yeah,
it's okay. It's okay to have a bias, but a loosely held bias, and be flexible to, changing that bias if need be. So like the index is like perfect example with that, was like when the news came out was like Wednesday night, I believe. That's when we were watching futures just kind of like fade.
yeah,
And I woke up the next morning and I jumped in voice with you, and our buddy Herv, who we trade with, and I kind of saw it immediately. Like we had a huge gap down, right? And so everybody's thinking short, right? Everybody's thinking short, seeing the headlines, like all the retail mostly, I'm sure. Uh, and I saw a consolidation pattern. That's what I saw. I saw a tightening. So it's like, I'm always very skeptical of like I have an idea of what's going to happen, but as soon as I saw that, I was like, this is a perfect example of you'd think like war headlines, right? You'd think with war headlines and the bombs are falling and the world's falling apart, nuclear war, and like everybody wants to jump short. Not everybody institutional wise, but everybody like, I'm talking retail trader wise, or your average trader, your average guy, maybe he's not so experienced, but like this is a perfect example. It consolidated off of a headline. It already fell. I don't even know here. Where's
I
close?
think we were
13,
down
yeah,
like
the one.
70, 80 points on ES, and then NQ was down like 350 at some
Yeah, it was
point.
down like
Yeah.
400. It was down. Yeah, yeah, it was
Yeah.
down. It was down a ton. And so I woke up and it had been consolidating. From the early morning hours, for us on the West Coast.
And I saw something cool in my other group that we
Uh
spoke about the
huh.
other day, where it was people, somebody said it, everybody's like, "Oh, we're bear flagging down here." It's like we're flagging. We're
And that's
flagging. Like
that's the thing. Yeah.
take the bias out of the flag. You know what I'm saying? We're flagging. We're
Yeah.
consolidating. It's a consolidation zone. If you
Yeah.
get a violent move in one direction or the other, you can trade that direction, right?
And
But
that's
if
the thing.
no, go ahead.
Totally. Go ahead. I was gonna say, like, it's. I mean, bear flag, descending triangle, kind of there, like, whatever. Like the technical, like that goes to show, like, there's a different element to trading, and it's not just like being a technical, analyst is not like there's psychology at play here. Like good traders execute and they hold these biases loose because what did I say as soon as I jumped in voice? Like I was like, don't assume down here.
Yeah,
Like that's the worst thing you can do is think that you just because you see a pattern, you know what's gonna happen. And it's so funny because it's happened to me so many times on the long side through 2021 where I would see consolidation patterns or VCP type patterns where I'm looking to catch that momentum out through that tightening consolidation pattern, right?
yeah,
And so many times in 2021 it would break out and just fade.
yeah,
And then some of them would flush and correct some of the
yeah,
stocks. And so it's like you got to always think about that in reverse. And like I look at once you get that experience and understand that nobody knows and you just have to react, like you can see the pattern, but look at that. I saw it clear as day. I was like, dude, this thing is realizing exhaustion, right? Realizing something look at this move straight down and then it consolidated.
yep,
Doesn't mean you got to wait for the break. And what did it do? It ripped everyone's face off. Short started covering anybody that tried to get short immediately. That's all on top of people who are astute and really good traders or institutions,
adding to the
great
buying. Yeah,
traders
you're feeling
adding
it.
to the buying.
Yeah,
And you just get, and then you could see it like all these shorts are like, I need to cover my, cover and take my profit. People are jumping on that long. So, even with headline risk, like it's not, you got to be ready for both possible, any scenario, really. Like that's and over time as a trader, you're going to get more experience. But that one was really great to me because it was something that was kind of clear to me,
yep,
even though I saw it on the long side last year of a lot of like things not going the way you thought it would, and then actually going the other way.
yeah,
Yeah, any kind type of tightening or consolidation, like that's what I love. You could just play dumb and just wait for it to show you with force. That's what I always talk about with force. So I just wanted to kind of share that because that was, and then look at this move off the lows. That was when the bombs were dropping that night.
yep,
And then look at this rally we got. We're still in a bearish market. I think personally, I don't think this was the bottom. That's just me. But then you see it make a move up back into some resistance, and ES kind of flag out, and then what? Rip higher, and then flat. Like
yeah.
you got
Repeatable patterns. That's all it is, over and
yeah,
over and over again. And you
yeah,
just trade those volume expansions through it. That's all.
yeah, and play dumb, and let it choose. And so that was really interesting to me to see it play out like that.
Yeah,
But that's and we could go to another subtopic is like adjusting risk, keeping your stops, things of that nature. Like especially in this with the volatility, and no one knows. Like we saw those intraday charts, when we were going through our trades, and just like Nvidia or Tesla, like where it's making higher high, higher low, higher high, and then all of a sudden it just flushes and then consolidates at the bottom throughout the day, and then rips and then flushes. It's chop. It's chop,
yeah,
and then you get the occasional big up day, right? Big rip
yeah.
or big down. So you really got to manage risk and really time your entries right if you don't, if you're newer.
And it's what we spoke
Um,
about. That's the only thing in last week's episode. That's the only thing we can control in the market is our risk, right?
mhm,
Your risk, your personal risk profile, what you're comfortable risking, where your technical is in accordance to that stop
mhm,
loss. Um, that's the only thing that you can't control how big the move is going to be. You can't control how violent the move is going to be, and you can't control if it does or doesn't go in your favor. So that's why
yeah,
it is important to have that stop in place, whether it be mental and actively monitoring the position, or a hard stop and just letting it play out.
yeah.
Otherwise, you could get your face ripped off by either a fade or a rip. I mean, it doesn't matter.
Yeah, and that's dangerous too. You don't like I use mental stops sometimes, but it's a slippery slope in my opinion
Yeah,
because you get sucked into that. Something moves big against you. I think it's okay in some, as you gain more experience, it is, but I don't know. That's something. This is me just thinking that popped in my head now. I think if I'm going in with larger position sizes, I might force myself to use hard stops just to, because that can get out of control really fast if your position size is big. So that's
yeah,
just how I think. I always think about when we talk like this. New things come up and ideas come up, and so that's something because that's exactly how I took that big loss. The PDT issue, but also not using a hard stop. So things you got to adjust and improve, learn from mistakes, and you got to be prepared. One thing I love about you, man, is like you don't mess around. Like I'm so bad where I think it's mainly for me. I don't have a set intraday strategy, even though it's coming. Like I could trade, I could trade intraday price action and kind of develop like a plan in real time. But I don't like that. I need, that's kind of where I'm lacking in intraday tactics for me. Is like I want to be like you, where I sit down and like actually create a real plan instead of kind of showing up to the same large caps and being like, what does the indexes kind of look like
yeah,
here? Is it going to be a range day, or could I see us flushing, and then instead of taking dart shots like that, like maybe really start playing off key levels and stuff. So that's just something I'm thinking about to
yeah,
improve my, because I'm a swing trader. Like but we talked about this. I don't
yeah,
want to sit on this. I don't want to sit on the sideline. And obviously, I was up 14% on my account, so I can trade profitably because I manage my risk really well. So
yeah.
that's like picking up the slack for my lack of preparation for intraday trading. But I really want to improve that because if this environment continues with this volatility, like I want to ensure I'm doing the best I can until swing trading comes back. So
Yeah, for sure. That I mean, that's what I like. Look, ink journal. I mean, this is where I
mhm.
write that. This is where I write down all my plans. Where I see
Mhm.
zones, key levels, and patterns and all that. And I have this, by my side every day. And every night I go through I go through my watch list, and I'm, jotting down notes. And I'm like, this could go here, this could tap here, this has, some volume gap here that it could fill here up until this key level or up to the
Yeah,
supply or demand zone. Doesn't matter. But, if I see a consolidation pattern in those levels, then that's where I execute my trades, but I have those planned out from
yeah,
before the market opens. Um,
yeah.
and,
I need to do better at that
yeah,
for
it provides
intraday
me a
for
huge
sure.
edge. Yeah, I
Yeah,
mean, but you were doing really well. Honestly, you were executing properly. Definitely, got a little gung ho there with yeah, I think, with just like the execution, because I know you're fire with the execution. There's literally for you, it's been no hesitation ever since we started talking on voice and trading on voice. So
yeah, I'm a planner at heart for sure, and so that's where the turmoil comes in for me because like I feel like you said, like I can execute really well. I don't have a lot of hesitation, and utilizing the tight risk entries like allows me to kind of get, that's where kind of my I get some good edge because I feel like I got a good feel for the market, and so I can kind of take that and see what the index is doing or doing on an hourly, and then execute on an intraday. But I'm definitely at heart I'm a planner, and so like that's something that I think I really want to, that might be able to help me a lot more, is do the things that you do because who knows with that Nvidia trade or that Tesla trade, if I would have like looked at the key level and said, hey, instead of just being like fading the first move down, if I was like, let me do business at the 240, oh my god, dude, that's a whole
yeah,
nother story on that. That was a big move. So that's what we do. We talk things out and we try and improve, and we do this through the week. So
and
we
we've
just
done a really good job of it since we started doing this back in like November, late
yeah,
October,
I'm
early
loving it.
November. So.
I'm loving it. And this is
Um,
like you guys go back and look at the other episode where I took a $1,300 loss, like, and look at us now. It really helps to have a partner and a teammate, and a community. If you got a good community too, a good trading community that's focused, like it plays
mhm.
all into it. So we'll always bounce back and love the consistency. And so, you have anything else for us, Juan?
I think that's it on my end.
All right. Well, it's great. It's been another week. It's been a pretty sad week, tough week in the market.
Tough week in the world.
Yeah, tough week in the world, and hopefully things get better. But we'll see. We'll keep watching the markets, and we'll keep trying to focus and improve on our craft, and obviously document that with you guys. So thanks for watching, guys. Remember, always manage your risk, stay focused, and be relentless. We'll see you in the next one.
See ya.